Well, friends, so we are taking up today contractors all risk insurance. Contractors all risk insurance. My voice is clear to all of you, and the presentation is also visible to all of you. Good. See, as far as this contractor all risk insurance is concerned, this is a branch of engineering insurance. And engineering insurance, it means ongoing construction projects, installation projects, machines and equipments, and project operations. That means engineering insurance refers to the insurance that provides economic safeguard to the risk faced by ongoing construction projects, installation projects, machines and equipment, and project operations. So for all these purposes, there are engineering policies. But engineering insurance is a very wide subject. Wide in the sense it has a wide range of risk related to engineering. Wide range of the policies of different kind of risk. Because these three things, that is ongoing construction project, installation projects and machineries, have a variety of risks. This engineering industry is about creation, designing, construction and buildings. These are all normal activities in the engineering class of insurance. And whenever there is a creation, there is designing, there is construction, there is buildings. That means there are increased chances of related accidents and perils. Because all these things comes with the related perils. So when the engineering insurance policies are there, they cater to the different forms of uncertainties that are associated with on-site construction, including plant and machineries. So why CR policy is there? Contractor all risk policy means what? This is a policy normally taken by the contractors, principals, owners, subcontractors. But why? The reason being, today India is among the fastest growing communities in the world, with an upbeat outlook towards rapid infrastructural development. So when we talk of the rapid infrastructural development, that means there must be some activities like railways, industrial units, housing facilities, dams, flyovers, power plants, and other such construction projects. In any country, in any economy, if these things are rapidly taking place, like dams, flyovers, power plants, in any countries, if these things are rapidly taking place, that means that economy is developing very fast, and that's a growing economy. So India is one of them today. But the question is, wherever there is rise in infrastructural projects, there is also rise in the material risk. Along with these projects, risk will also increase. So the possibility of damage to the construction material, machinery, constructed portions, the damage or loss due to environmental and man-made hazards can lead to substantial losses for the contractors. Because this kind of projects are normally taken by the contractors either on the tender basis or on the direct supply basis. So whenever there is any state government or central government is going to develop some projects like flyovers, like dams, power plants, they are normally inviting the tenders and giving the contract to the contractors. They are also putting a condition in the contract or in the tender that you will have to submit a policy, insurance policy, for the projected cost. So this policy is required by all the contractors to submit to the concerning owner or the principals, as well as to cover the risk of the project till it is completed. So that is the reason this CR policy is required for all the contractors wherever there is a civil construction project. Now in the engineering insurance there are classes, various classes of policies, and these are divided into two types. One is annual policy, other is long-term project insurance. So when there is annual policy, this annual policy includes contractors, plant and machinery, CPM, EEI means electronic equipment insurance, MBD means machinery breakdown insurance, BPP means boiler and pressure plant insurance. They are all annual policies. As far as long-term policies or project insurance is concerned, this includes contractors all risk and erection all risk. Now the question is, what is the basic difference between these annual policies and long-term policies? Why they are different? Why they are classified in two different categories? The reason being, all the annual policies are renewed on the expiry date. Either they are renewed or they are discontinued. Because these annual policies will continue only for 12 months. These can be shorter than 12 months according to the requirement, but cannot be more than 12 months. On the expiry date, if it is required, the policy can be renewed for further 12 months. Because these are all related to the operations. Now the other policies, that is long-term policies or the project insurance policy, they are the policies which are not renewed. When these policies expire, so they are extended for the further period till the project is completed. So what is the difference between renewal and extension? Renewal means the policy can be renewed on same terms or on different terms, or anything can be changed, because the requirement could be different. But in long-term policies like CR and ER, they are renewed on the same terms. When they are not rather renewed, they are extended for the period which is expected that the project completion will take for the 6 months or 1 year or 1.5 years or 2 years. Policy can be extended on the same terms and conditions, because the project is same, location is same, contractor is same, principal and owners are same, or this draft, that design and the planning is same. So it doesn't require any change in the proposed project. But of course, because it is not completed, it's a long-term project, time is extended, plus the amount can be extended, because the cost may increase. So the basic difference between these two kind of policies is, one is annual, that is issued for 12 months and then it is renewed for further periods. Long-term policy is extended for the further period which is required as per the completion requirement of the project, but it is renewed on the same terms and conditions. So this is one classification of the engineering insurance policies. There is another classification which is based on the construction phase and operation phase. That means